Hello and welcome to the Pipnotic Symposium for the 7th of March 2018. Today we are going to continue what we have been doing. We're going to be walking through a lot of these orders and see how they did and analyze each trade just to see if we can get a little bit smarter as to why some of them worked and why some of them did not work. So we're going to go through here. First of all, second, third, so these are good. Let's drag this one on the chart. And this was a buy right here. So let's mark that off and have a look why. We looked at this and you can see that price started down here. So we have the major low here and we moved up. And so we're expecting some kind of a reaction here. And we did, but we didn't get the trade and the order was left on. Let's have a look here. So we got a little bit of a bounce here, and then price came down. We had these lower tops kind of squeezing price to the downside, and then price ultimately got stopped out. And so this was an interesting area here because price had a really nice bounce at the level here. The spread missed us, and then price went up, and it went up pretty far. Let's have a look. So it went up like a very far, over 80 pips. That's a really decent move there. So had we considered the spread, I put the trade in a little bit quickly, so maybe I didn't consider the spread. This is also maybe an exotic, and so the spreads are going to be a little bit wider. And so this, of course, is going to affect if we're going to get filled. But we didn't get filled. The order didn't expire. And as a result, price kept moving down, and price stopped us out just here. But it looks like we're kind of forming of a base here. You can see the currency strength histogram that we are seeing. We're seeing kind of higher lows on the strength information and lower lows. So it looks like we're losing some momentum down here on the bottom. You can see that we're approaching this really nice area of demand just down here. So what we're going to do is we're going to actually put an order in to buy just down here. And if we look at this for a second, let's study this little price pattern here. We'll mark off the whole weekly area, then we're going to go to the smaller time frame. We're going to have a look at it. We'll go to the hourly chart. I'm going to scroll left and remove these orders so we can get a nicer look. Okay, so you can see here that price formed this base, and it's kind of been up and around this area. So we have this this price range here from like around here, and price kind of went up and down for a while, and then we moved up. We tested, we accumulated below, we popped through, we tested the accumulation, then we went north. So this is interesting to us. Another thing that's interesting to us is that price has already been back to this level. So this area of demand has been tested, which brings our focus back down to this. And what I don't like about this is that price has already been back down near here and here and here. And so, as a matter of fact, I'm going to mark the lows like this, and then I'm going to scroll back and see, make sure we got this right, where this brings us if we continue to move backwards. Yeah, you can see we have this right here. See, this one I like better because this is price testing here. And what I also like here is if we mark this one off, we'll just mark from precise area like so. Let me go back out to the 4-hour chart, maybe in the daily, so we can get a bit more. You can see how this is just a really nice test on that little area of accumulation that we saw down here. So price came down here. And so what does that tell us? Well, that tells us that we actually have demand down here, and this is more of a reaction to demand than demand itself. And if you, let's go back down to this again. So this here is kind of price filling orders. So price comes down into an area like a pool of liquidity. We move into it, we react at the first level, we accumulate. Price goes a little bit deeper, finds liquidity, we wriggle higher, we drop down, we stab into it, we start filling orders. And the process of filling orders is it can be gradual because the algorithms that are ultimately slicing up these orders and filling them, they happen when price enters like a price window, like a threshold that the big institutions are looking to enter a trade. So mean, price will poke down, then they're in there, and it'll start filling orders, and then it'll leave the window, and then price will drift sideways, then it'll have another push down. The window will open, start filling orders, push down again, start filling orders, it'll leave, it'll move a little bit higher, price will push down, it'll enter the window, the price window, orders will start filling, and once the balance in supply and demand changes, and so we have more demand than supply, well then price will start to move to the top of the range and ultimately start doing stuff exactly like this. Price will come up and it'll accumulate, and you can see that we have a strong push, then price accumulates for 3 periods, and then it pops up. Now this is telling us when price does this, moves up to a level and accumulates just below it, this is a very clear sign that price is going to try and move higher. And so this is what we're seeing. When price moves out of the range and then comes back down, I mean, this is a very clear buy signal, because we have this range, price left the range, accumulation, price returned to the accumulation, and now price is leaving. And so this is a very clear pattern. But you can see that this is all happening where? At this upper edge of this area of demand. So if we go back to that area, just here, you can see that we have it here. And now I'm going to also take this, I'm going to move it down here and see what price is reacting on down here. So we're going to go a little bit further to the left. See if I've got enough data. Fingers crossed. Yes, we do. You can see that I can't get any more. This is as far as I can go, so I can't see what's a little bit further to left here. But I mean, price is ultimately reacting on this, and this looks pretty close to what we just saw in the daily box, where price was moving sideways for a while. It pops up, maybe broke out of a range over here to the left. It accumulated, and then it went up again. But you notice that since price left, it didn't come back. It hasn't come back to a price any lower than this here. And so we can expect price to come back to an area that is fresh. So you can see that price came back to this area on this pullback, but it still has not been to a price level that's below this pullback. And so this is where price came back to. So the bottom end of that really nice area that went down like that, we had one period, and then price went up. I mean, that actually happened down here at the bottom. So that was very, very interesting as well. And you notice again that, I mean, if you ask yourself the question, I mean, why does it do this? Well, it makes actually perfect sense. And it makes sense because if you look at a price structure, like this, for example, providing that a big bank wants to start buying down here, they need someone to sell to them. And so let's assume that a lot of people have their stop orders located above or below, like medium term, long term, or short term swing highs and swing lows. So this is going to be a logical area to place stop losses if you're looking to buy. And so ultimately, I mean, that's not a good example. Let's go like this. Okay, this is like the new example. So people are going to be entering here. The stop loss is going to be entering here. But if there's a big institution that is looking to sell, they will try to get their orders filled up here, but maybe there isn't enough liquidity to cap price. And so what they're going to do is they're going to push price up and into this area, and very likely in many circumstances move through it to do what? To hit those stop orders, which are ultimately pushing or flushing liquidity into the market. And those stop orders getting hit ultimately provides a liquidity that the bigger institutional traders will use to fill their short orders. And then this is when you typically get a candle like this with a very, very big pin, and then it opens, it goes up, it closes with a very small wick down here, and then price will typically dump from there because it's found the liquidity required to fill these short orders at an area where the retail market will have their stop orders. We kind of touched upon this last week, and we also put it on one of the points on the trades that worked out well, and that was that you want to ultimately put your entries where other people have their stops, because this is going to give you a huge advantage for reasons that we've just seen just here. So someone has their stop orders around here in the bottom end of this swing low. Obviously the banks are going to try and push price down into that area, hit those stops, and then again consume the liquidity that they need to fill their orders to push price higher, which is what we can see over here, right here. And this is a really good example of that. So this is an institution selling. So they start to sell. Boom, they sell an order that drives price low, it drives price below. It pokes into the area where they have the stop orders a little bit further just to make sure that we hit a lot of them. And then they start buying, then they buy back. And so they risk a little bit of money by pushing the price lower like this. And then they buy everything back, and they square up on their short positions, and they buy at an area, and you see this. This is exactly what you can see here. So when you have price doing this, then it shoots down like this. Typically, it can be kind of any time of the day normally. Then there's a very good indication that price is like looking for liquidity in the form of limit orders to buy or stop orders that are going to be triggered should price manage to move below one of these pockets of stop orders that retail traders are going to have. And so, I mean, this is just a really good example of that. Okay, good. Let me clear that up. And by the way, if any of you are experiencing that you apply a template or you put the strength indicator on there and there's no indicator, you think, oh, what's going on? Just simply change the time frame and then it'll switch on. It's because there's an event on in the software that looks for kind of it's like a on initiate event, and whenever the chart changes time frames, then this event is called, and the code to start calculating the strength information is called when the chart time frame is changed. So just keep that in mind if you're not seeing the Instagram. Sorry, the Instagram. What am I talking about? The histogram. Good. Okay, let's go back to another one. Let's have a look at this one here. This was the dollar Swiss franc. And what did we do and where? We sold just here. This is again a really good lesson. I like this. And if you look at this for a second, you'll notice, let me zoom in a little bit. You think, wow, what a great place to sell. And so you think like, great, I've got a really nice place to sell. I got this really nice pattern, price went up, we have a trend line break, blah, 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 price left. What happens? The exact same thing that we saw just a minute ago. And so you have to look. Whenever you see, first of all, I want you to, we mentioned this previously, but I want you to start drawing. Sorry, let me go like this. Drawing these major swings, because these are really important for us. So if we have a swing goes like this, you know what, I'm going to go do. Oh damn it, I got a new computer and so everything's different. So go like that, sorry, that's a bit of a messy one. Okay, so when you have these big pullbacks like this, what is this? Well, price does not go down, down, down. It doesn't go down, like it's not linear, and it doesn't go up, buy. Well, price is going up, it just goes up on the minute chart. It's just bullish candles. It can't do that. It's impossible for that to happen. It needs to seek the liquidity that is required to get price to move either higher or lower. So price is actually not moving because of filled orders. It is moving because of unfilled orders. And I think that probably sounds a little bit counterintuitive, but that's the truth. If you look at a price chart, it's only showing you orders that have been filled. It's not showing you anything else. Or we can see here that we have a bunch of orders that were kind of filled, and we can see that we have a bias, and that is kind of moving price down. It's showing us what has happened. The price chart is showing you what has happened, but it's also leaving clues as to what happened when these orders were being filled. And you can see that, I mean, price went down, it came up, it went down, it came up again, then it went down. Well, notice where price came back to. price came back to this. And so here we have a high. We have people that are putting their stop orders up here because they want to sell around here, exactly like we've done here. So what have we done? What happened? You can see that, wow, price went up and it went to this really nice area of supply, but it went through it and then it really dumped. Isn't that odd? And you should be able to see these now and say, actually, it's not odd at all, because price has to move higher to find the liquidity required to drive price lower. And so in a very clear, visibly clear area like this, an area of supply, and this is supply because when we broke this micro supply, we broke this trend line. We managed to, since the release from here, move price below here. So it is supply. It's not very whopping supply, but it's supply nonetheless. Price managed to go up to it. We had a little reaction, and you can see that price just poked through it. So we had a kind of a candle there that looked like this with a big wick. You can see it right there, this candle right here. And then price really fell away. We maybe had, looks like there's a doji there as well, so maybe, let's say it looks like that. I think this is actually the high candle, like so, with a very small bottom. And then price dumped, like so. And that is, the dump bar is this one just here. And so that tells us exactly what we just spoke about on the previous trade. And so you have this really nice area. And so I'm going to turn this off, and now we're going to go through the process. You think, okay, cool, I'm going to sell. We have this nice area of supply here. I'm going to put my entry here, minus a few pips, and I'm going to put my stop loss just above here, and my target somewhere else. You would expect that to hold, but if you focus on what you can't see on a price chart, which is liquidity, there's a pretty good likelihood that price is going to do this. And that's because price has to go higher to find liquidity, because we know there are a lot of stop orders up here. So there's, when we have a bunch of them here. Let's just kind of like that, go like that. We have a bunch of them up here like that, and so price pokes into those, and that flushes the market with liquidity. And this liquidity, the bigger traders will use to fill their short orders and drive price lower, as we can see here. And so while this does look like a really nice trade, this will often happen. Sometimes it won't. Sometimes price will come just to the bottom of it, just poke into it, and then dump. But for that to happen, we want a much better area of supply than this one here. Going back to our previous trade, first of all, is this a good area of supply? It's a pretty mediocre area. Why? Because price accumulated in the area for quite some time. We have 1, 2, 3, we have 4 periods of accumulation. If you look at this, has price been back to this area? It has. It's been back to this area here, and it's been back to this area here. So if we remove, it's going to go like this again. So if we mark where price has been back to, it's been back to here. I mean, this is the pullback. It pulled back once, twice. So this is actually the third time back. So viewing the market via our liquidity or sell side perspective, we know that this is a third time back to this, and so price will almost have to go a little bit further up in order to find fresh liquidity that is required to dump price. And this fresh liquidity, as I mentioned earlier, is going to be in the form of stop losses or limit orders that are positioned strategically precise in the market like that. Cool. I find this stuff so fascinating. I really hope that you guys do as well. I think it's an amazing topic. Okay, let's do another one here. This is the CAD Japanese yen. So we wanted to buy here. Let's mark this off, and then let's see why we would have taken that trade. Let's go back. You can see here. So we have this. So we have, where do we go? Here we are. So we have this area like this. And I'm going to trick you. Every time I open a trade, I'm going to trick you. I'm going to convince you. I'm going to try and convince you that the trade that I'm taking is going to be good. Okay, because I want you to say, to argue against my reasoning. Okay, because I'm going to trick you. I'm going to say this is whatever area is a good area, and I want you to do what I'm doing on your own, and I want you to ask yourself the right questions, okay? So we have a target to buy here. We have our stop here. This is not a very good area of demand, first of all. Let's have a look at it. Okay, so we want to buy here. Our stop is here. Price has already been back here, so I mean price has pulled back to this area here. So we are actually in the buy zone. And we have this. And so now look at this and ask yourself the question, would this pass the quality checklist? Or you can ask yourself a question, has the indicator drawn a box there? No, it hasn't. And why has it not? Well, it hasn't because, number one, price did not leave that area very strongly. It didn't go very far, and it went not very far in a long time. And so that shows that there's not a lot of strength behind the move. Okay? And so we put an entry here. We have our stop just below, and then we wait. And you can see here that this area has been tested once. If we're super precise, you can see that the price has been back to the low of this candle on the release. Let me go and see what happened here. You can see that price went here. We had a reaction, but it went to where? To opposing very, very micro demand, supply, sorry, and then it cut through. It went all the way through it. Okay, and so if we have a look and see, I mean, where did price go to? So let's mark off the low. Well, obviously it went to this daily area, but let's go back and have a close look. I mean, where did price go to? Well, it went to, I got to mark off this area here. Because like it's a bunch of areas nested, so it went to this one here. From here to here. So this is a daily area. Okay, so it went like that. So it went back to this area. So we had this area of demand. Is this interesting to us? I'll tell you, it is interesting. And would you argue for or against me saying that this is an interesting area? You can either stop the film or just wait now. And I'm going to tell you, this is not a very good area at all. Okay, and it isn't because there's nothing going on here. This is not demand at all. This is a reaction to this, and this is a reaction to this. Okay, and you can see that this candle is pointing to a price level that is all the way down here. What does that tell us? That means that price has already returned to a price level at the very low of this area here. And if we go to the higher time frames, we've got to see what's going on there. You can see that, okay, well actually price has been back to this area here. You can see. So we had initially, we had this area here. We're gonna mark off this. Oops. So we're gonna, okay, here we are. So we're gonna mark off from the low of the lowest test to the low of this. So a very small area. Price went into it and it went through it. Okay, and so what does that tell us? That tells us that we probably had some people looking to buy here. They had their stops below the low. So we have a natural expectation that we have stop orders positioned around this area here. Who knows that? Oh, the smart menu knows that. So they know that if they have big orders, they need filling. They need price to go lower. And so we have a green candle here down. That might make you feel a little bit uneasy. But it shouldn't scare you because this is probably some kind of like a larger customer that's selling to drive price to a lower price level where they expect a lot of stop orders to be located, because again, as we mentioned, stop orders will be triggered. This will flush the market with liquidity, and then they will be able to fill more of their larger orders at this price level. So when that happens, price goes down, it sits on the level, it goes just through it, then we move higher, we test it, and we move away. So price has been back to this price level once, twice, 3 times. So why would we expect price to react here when price has already been back down to this low here? Okay. So this is just a, I mean, first of all, I mean, this is, it's an interesting area because Price rallied, accumulated, rallied, we came back, and then it left very, very quickly. It was interesting when price was here, but obviously the sentiment has changed since price left. When price is moving away like that, you want to focus on bleeding edge price, which is here. This is no longer bleeding edge. Some fundamentals may have affected the supply and demand of the Canadian dollar, the American dollar, or the strength of the Canadian dollar, Japanese yen, I apologize. And this, of course, we can see down here. So we have a price imbalance. Price comes back to this level once, twice, it comes back up, it comes back down, it starts to feed into here. And when you have on the daily chart price moving down like that, first of all, it's super dangerous to start to buy unless you are positioning yourself on like the major order flows, which are going to be located below here. So the buy zone for this starts around here. Then you look left and you say, okay, so that's the buy zone. Where do we have demand? We don't have demand until just around here. And so once this has been tested once, then it becomes invalidated, and then we have to start looking left once more. And you can see that, I mean, price went all the way down here. Okay, and then we have this orange line, which I've put. We go left and see, okay, well, where does that bring us? Well, that brings us to here. And this is interesting because it shows us that we have a weekly area of demand that was tested once, twice, 3 times, 4 times, and the parent is this one here. So the area of demand that's interesting, is down here. This is on the weekly chart, weekly demand. So it looks like this. So if you go like this, and you go out to like the weekly chart, we can see it a little bit clearer. You can see that it brings everything into perspective, because now you can see, oh, here it is, it's down here. You can see that this is actually a major low, and so you know that should price challenge the lows here, we know that there are going to be some stop orders below this low here. And so this is going to be an interesting place to buy, especially if you can have your stop kind of pretty far down into this area, this pool of liquidity here. Yes. Okay, I hope that that made sense. But for the time being, you can see that, I mean, we're reacting at this supply up here. I mean, this one is old news. Let's delete that. So price is reacting at this area of a weekly and monthly supply. Price is left. What does that mean? Well, that means that we are actually in a weekly downtrend, which means that buying 4-hour demand is a really bad idea, because we have the major order flows that are moving in opposition to our position. So be super, super careful. Okay, next trade. We got the Aussie Franc. So what do we do here? We bought just here. Okay, so we're going to mark off the low here. We're just going to go to the hourly chart and look at this, because this is an hourly trade. Okay, so we wanted to buy here. Okay, price, and I'll ask yourself, then I'll ask you, is this a good area to buy, or is it not? Now we of course know that it was a potentially dangerous area, but let's just kind of reiterate the thinking process. Has price been back to this area before? It has. Once, twice. Okay, we have this nice swing low. So assuming that people are going to be buying down here, where are their stops going to be? Well, they're going to be here and here and here. Come on. And here. Okay. And the big banks know this. They know that, wow, the retail guys are going to have their stops below this low here. And so if we want price to move high, we're going to have to push price through those stops, trigger their stops, and this will provide us with the required liquidity that we need in order to fill our long positions. And you can see price poked through there, stuck around a little bit. It poked again. Still, there was we had a little bit of reaction, so there was an imbalance in the supply and demand here. You can see that price poked down. We had a big wick. Oh, and then it started to go high, but it wasn't enough. And price restabilized, and it started to go lower. And this is the banks pushing price a little bit deeper. When that happened, we had price coming down, we had big rejection, rally, accumulation, and then price went up. We consumed this area of supply here. And let me do this again. So now we can do the whole, come on, this is fine. So, sorry, kind of lost. Okay, here it is. So we had this. Price came down. I'll take the wicks. Once, twice, 3 times it cut it through. So now this one is gone, and this is demand. Why? Because it took out this. So you mark off this, and this is supply. Because why? Because we managed to move below this low and take out this major swing low. And so now this one is gone. What area took it out? Well, this one did here. So we can move this back down to here. This is where we got like a small reaction, almost an insignificant reaction, and then price cut through and went below it. So what area of supply? What origin of a move managed to move through this one here, like so. Price tested it, now it's gone. What area of demand took out this supply? This one here. Okay, this is almost gone, not gone yet. And this is what now we're at bleeding price here. And so expecting price to bounce here is wishful thinking, because, well, we have a lot of reasons. It's been tested before, and it's actually, this is not demand, it's a reaction to demand, which is down here. We have a lower price level here, which is very interesting to us, because this is kind of a beginning of probably a macro buy zone. And this is telling us where it starts. So price pushes down. This is the big money pushing price lower to do what? To hit people's stop orders. So if we go up here on the higher time frame, you can see that yes, but we have all these lows here. People are thinking, man, I'm going to put my stop below this major swing low. So they do that here or here or here or even here. And where does price go? It goes just beyond. And then this is where we see a reaction. And so you really have to pay attention to these wicks, because they mean everything. And it doesn't matter what time frame you're on or what a GMT offset you are. The clues are going to be the same. They're going to look different, but they're going to be the same. They're going to look very, very similar. Okay, and so we have this going on. And so price came down here. We had a reaction on the first test because this was a retest of the lows here. Not this one, not this one, not this one. Why? Because price has already been back here. Not this one, because price has already been back here, here, and here. So this is a low. Price came back to that low, plus the spread, and this is where we saw a reaction. Price has already been back down here, so we do not buy again. We wait for the next one. And price reacted on the upper end of this area of demand. Here you can see. So I put my entry to buy at the low of this, because we know that where people are going to have their stops below these swing lows. We're on the daily charts. There's probably an hourly or a 4-hour area of rather swing low here that is going to be a very obvious place to put your stop. And so this is where I think price will go to before it manages to find liquidity to drive price higher. Sorry, voice disappearing there. Okay, cool. Let's have a look at another one. What happened here? So we wanted to do this. We wanted to buy here. Let's go on the daily chart and have a look. Was that a good idea? Or was it a good idea? And we have the exact. Isn't that funny how these things tend to repeat themselves over and over and over again? So we'll look at this. Say, wow, we got this really nice area of demand here. Whew, I'm going to load the boat. You know, this is such a nice area. I mean, price accumulated for what? For one period. We had green candles prior and after this accumulation candle. And price didn't even get there on the first test or the second test. I'm going to buy here and I'm going to load the boat. Is that a good idea? I won't answer that, but I will go down to the smaller time frame and have a little look. Rather, you know, we didn't need to. We can stay here. Where are people going to have their stops if they are buying at this area? Obviously, here or here. From the lows. And they're going to be kind of spaced a little like pockets of maybe 5-10 pips. And so where is a really good place to buy, knowing what we now know regarding liquidity and the seeking of liquidity for big institutional traders? It's going to be towards the lower end of this area of demand. This has technically been tested once, twice. We came very close here. When this happens, this is of course kind of eating up liquidity a little bit. We had a reaction, price went down, it went up. We almost hit the target. I closed this trade because it was kind of close enough and I wasn't in front of my computer screen, so I just closed it out. This was pretty much a one-to-one. Let's have a look actually. I think it was, but so we had 175 pips, 180. I mean, it was exactly a one-to-one, which was actually the lows from here. So I closed it out because that was kind of a win. It was just like a poorly configured win, but price went down here, and this is where we had a decent bounce to the opposing side of the market, which is resistance, which is just down here, this low here. So really interesting, very, very interesting. Okay, let's flush and continue. So what did we do? We bought down here. And why was this a good area to buy? Let's mark this off. And this is a good area because we were doing this. So we had the lows. Actually, this is kind of a similar position that we saw earlier on, the Aussie Franc. Yeah, just down here. So I mean, we bought down here, which is the lowest low the price retraced to prior to releasing. And you can see it went down here. As a matter of fact, it went all the way down, looks like to the high of this. So support, not demand, support, and this is where it found support and managed to move higher. We had our stop just here, which is pretty close, and our price is moving away from there. And you can see here actually that we have no supply in here. We probably have some divergence, a low and a low. Let's confirm that on the histogram. Yes, indeed we do. We have, you can see it, that's not very clear. On the 4 hour you can see it, how we have prices forming lower lows, but you can see there's a huge divergence in strength. So let's see, make sure this is on 55-ish periods. That's great. That's fine. We're on 55 periods, just in case you're wondering, here on the histogram. And I mean, price is managing to move kind of above and away from that area. So I mean, that was an interesting trade, and it went back roughly to where we wanted. Let's have a look here. I just want to make sure. I think we bought here. Okay, so we bought pretty close to the lows. So that was good. We got our one-to-one finished and done. Good. And so, I mean, why did this trade work in contrast to the others? Well, let's have a look at that. Let's assume that we said, we have demand right there. Boom, I'm going to buy right there. Has price been back here before? Is this a good area to consider to buy? So you put your entry into buy. You go, cool. And then you say, like we added on that last slide that I showed last week, okay, where are the retail guys going to have their stops? Well, the retail guys are probably going to have their stops on the other side of this area. So you just move it down to the lows or close to the lows, which is what we did here. And price came back to it. It tore through it, went back to this support here, and this is where price left. But isn't this a much better entry than up here? Yes, price did move against us for a while. It moved against us, 22, 23 pips. But if you're okay with that, we're on a daily chart, so that's not that bad. Daily range for this pair is close to 70 pips, so you know, not so bad. And this is where we saw the reaction. This entry is much better than the one up here, okay, for reasons that we've discussed earlier. So do that every time you put a trade on. Put it in there, leave it, and say, okay, in relation to the trade that I have right now, my position that I'm willing to put money on the table to risk, I'm willing to risk in order to see if this trade comes to fruition, where are the other guys going to put their stops? As ultimately, it's the same question as where has price not been? Okay, I'm just trying to rephrase it because I think this new terminology will help answer some questions. So you say, where has price not been? Or where are retail guys going to put their stops? Well, price has not been back to a price level that is any lower than the low here. So this would also be a pretty logical place for people to put their stops. Okay, so start doing that. Put on your order, your pending limit, and then say, okay, where do the retail guys have their stops? And then move your entry to that area. Okay? Okay, no more. Let's go to the next one. So we sold up here. Yeah, so we have another one going on here. I don't really like this much anymore. I'm going to click. I have a lot of these orders are super old, so we're going to have to look at those and maybe re-go through those. But if we look at this for a second, I mean, this trade worked out. This was there's no comment. It's because the take profit got hit, so it wrote over my comment. So I can't. Okay, I mean, it looks very clearly like a daily supply. You can see we have the box. It's been tested now. Let's go down and have a look. And you can see that, yes, I mean, price reacted here. So you have this low here. Price came up. And so we were looking for a price a little bit higher than that. This is actually not a good. This is one of those bad trades that went into profit that won. So I was actually hoping that this one would have lost, but it didn't, unfortunately. And the reason I wanted this one to lose is because this is not a great area of supply. Okay, so let's have a look. First, I want to draw these. Boom, boom, like this. Okay, so now we're looking at the major swings. And I see, like, I mean, where has price not been back to? Where are people probably going to have their entries to sell, and where are their stops going to be located? Well, they're probably going to be located like something like that. I think we could all agree. And so price, this would be like a pretty obvious place to look to sell. Then you would ask yourself the question, where are people going to be putting their stops? Well, they're actually going to put their stops in an area similar to where we have our stop right here. And so we'll do that. We'll just move it up like that, okay? You have to think about when you have supply and price testing supply, you don't want to take the child. This is not an area that you want to trade. Why? Because it's a child and the parent is here. This is supply. This little accumulation candle is supply. This is a reaction to supply, okay? And so we can expect price to come back, return to a price at least as high as the most recent and deepest pullback since this price structure was formed, okay? So we're expecting price to come at least back to this one here. And this is pretty ugly because there's nothing up here that looks attractive at all. We have this high and that's it. There's nothing up here that looks nice. We don't have anything. You can see prices kind of moved up here. Ideally, we're looking at the highs. You go to the bigger time frames and we see, like, let's remove all of it. Let me turn this off. Let's turn these off, and then we're going to go back and look, and you can see actually that, I mean, price is just returning to this. So actually we are kind of in a slightly range bound market, albeit the fact that we're moving a little bit higher, but this is the upper end of the range, and you can see that price has already been back to here. So we would expect price to react at these highs. So the sell zone starts here and it goes up to here, but this is not a nice area of supply at all. So this is gonna, yeah, I don't like that. But we're gonna leave this one on here because we want to engage in the market to get lots of experience on our hands. So we're gonna leave that. The reasoning is good enough. It's just it's not a very pretty area. So if we go back to the 4-hour chart, we'll leave it like that. Make sure we've got a 1-to-1 like that, roughly, and we'll leave it at that. So this is one of those bad trades that worked out well. It's bad because there's nothing up here that we'd want to sell. The only thing we can see is we have an okay area here, but this one has already been tested one time. Once. Okay, so we could maybe look at this. There's nothing here. There's nothing here. So this is actually fresh supply because there's no supply here. This is fresh supply, almost tested once. So you could expect a reaction here. I'm not going to trade it because I don't like it, but I encourage you to put a demo trade on there and just see how it goes. Keep in mind that if you're using the histogram or any other strength software, the histogram or the GFX version, we have momentum slowing down, we have price moving lower, and we have the strength has bottomed out here, and we have a higher bottom here. So it looks like that we could potentially wriggle higher from here. Let's have a look on the weekly and see where we are. Yeah, we're not really reacting on anything. We don't really have any demand. Oh, that's pretty messy. We don't really have any demand until, yeah, maybe kind of towards the bottom of this. You can see there's something in here. You can see that price is reacting. You can you see here that this went high, it went up, and then it went down, and then went up. There's probably something going on in here as well. And so, I mean, this is where price came to. This is kind of where the shift of the weeks. So there's probably something going on here, which is why price is having a bit of a bounce there. We had a really nice reaction here, how price accumulated more or less. We moved away, price came down up to it, and then we left. And so we're actually reacting at this area of a supply. There's no real supply until we get to around, I mean, here this is an okay area because price managed to close above here, but we have kind of this one here, or maybe something in here which has been tested. So I think this is okay, but I mean, this is months, years away. So we go down to the hourly chart and have a look. You can see that, I just want to see where we did sell. We sold here, and you can see that this was the pullback of this candle here. Okay, and so price went up to this. It's kind of crazy how price, I mean, look how precise this little area is. Sometimes it amazes me how it finds these, but I mean, we have this pretty questionable area of accumulation. I wouldn't have traded it. Price came back to it, and this is where we saw the reaction. I would never have traded this. I would look at this one, which we spoke about just a second ago, and maybe look in the higher end of that, of this area here. It's not a great area because price did manage to come back, but price has not been back to it, and as long as you're putting your stop above, I'd say it's a good exercise to have a look at. Okay, we have a few more trades on. We have this one, by the way. This trade here went into profit quite a lot. I mean, price, we had a 1-to-1. I don't know what happened. Let's see. So 50 pips, almost a 1-to-1, and there was no comment in this one either. So I'm not sure. My son was on my computer one day. This is not a trade that it looks like it's the same position size as this one and this one, so it looks like it's a standard position. So this is a trade that maybe was accidentally put on. Anyway, let's have a look at this one. We have the Kiwi Cad. Let's clear this off. What are we doing here? Well, we have some interesting stuff going on. We have a high, a higher high. We have a high and a lower high in the strength information, or the beginning of it. And so if we look at where we put our entry, you can see that we put our entry where? Above this. This is the pullback. Okay, so I mean, price pulled back here. So we don't want to be trying to sell in here because there's no supply in here at all. Nothing. There's nothing here. We have a little bit here on the break. Just here, you can see if we go down here, just at this accumulation candle, this is where price broke away. We had a reaction over here. We don't trade that the second time. On the second time, what happened? Yeah, it worked. But price managed to move through it, and there's nothing up here. There's no supply. The only supply we have is up here. And this is supply because, not because it's a pretty area, but this is where the market turned on this pullback. So we had like a couple of weeks of trading up to this area, then price fell away. And so price is ultimately reacting at this area just up here. So it's moving beyond here. This is of course going to be an obvious place for people to put their stops. We do have a bit of supply up there, and this is what price is reacting on. So now we're kind of holding this and waiting and seeing what's going on. Keep in mind, I mean, if you're trading against this stuff here, this is pretty significant. We have a serious linear increase in strength information here since about right here. You can see that we had a divergence going on here. You see we had a low, a low, a lower low, so 3 pushes lower. We had 1, 2, and then nothing really here, and then price went away. So when you start to see this, it means that you've got to be careful. And also notice that this is going on where? At weekly demand. So you go to the weekly chart and have a look. You can see that price is actually doing that at weekly demand, which has actually been tested. And so just be super careful about that, because you're going to get in trouble if you're trading against like stuff like this. This is pretty significant stuff. And the price is still wriggling higher, and so this is actually a low probability trade. Why? Because we are trading against the major flows, which are long interest rate swaps, and also we have a weekly trend that is moving higher. How do we know this? You can see that the rectangles are below price. That means you only want to be buying. Okay. Good. Well, that's what we have for these trades. We have a ton of trades that we've gone through, which is marvelous, and I hope that this stuff is making sense. I will put this out, and I'll throw in a few more trades, but I think we have a lot of trades in there, as you can see. I'm not sure what this one is here. I'm just going to remove this because there's no comment. So there's no comment and there's no plan. Kill those. Good. So we have that one. So all these other ones they're set, and we'll just leave those. And in the meantime, I'm going to throw more trades on so that we'll have something to analyze. And I'm hoping in the course of a sample size of about maybe 500 trades. I mean, the whole madness of doing, the whole purpose of doing this is actually just helping us identify a method that'll help us identify good trades and stay away from bad trades. And so what we're doing is we're creating an enormous sample size, and I'd like to have 500 trades or so by the time we're finished. And then we're going to have one slide that I'm going to show that you saw last week that is going to show the similarities of the winners, and we're going to have another one which is the similarities of the losers. And so this is going to be very interesting for us. And ultimately, when we're done, you'll find that the similarities of the winners is the essence of the trading model that we use at Pipnotic. I'll leave it at that. If you have any questions, please send them in, and thank you very much for watching.